Trading will destroy your life. I spent years over trading, convinced that more trade means more profit opportunities. I was completely wrong. I finally discovered that the market rewards patience and precision. I've spent years in the financial market trading, and I've come to discover a lot of things which I'm going to share in today's lesson. Over the years, I've actually had profitable months, failed setups, missed trade opportunities, a lot of ups and downs, and I'm going to review all these in today's lesson. These are a list of pairs I had interest on this particular trading week. As a matter of fact, this is actually the same trade opportunities if you take a look at our VIP community. Now, we have about 7 trade opportunities right here, where 3 of the trades were missed trade opportunity. We have some failed trade opportunity, and we equally have a winning trade opportunity. So this is typically how my trading week was this particular week. This is actually the very first week of December. So this was how my trades went this week, December 2025 actually. So what I'm going to do is I'm going to analyze all these trades, especially for smart money traders. We're going to discover what we actually did wrong, what we can do right, and how we can improve. Another important thing I'm going to do is, after explaining any of these trade opportunity, because we have about 7 trade opportunities right here, I'm going to give you a psychological tips which is going to improve your trading by next year. Because this particular year, the truth is I wasn't able to hit my yearly target, because after being profitable in the financial markets, this particular year has become the worst year I've actually been in this market since being a profitable trader. As a matter of fact, I'm about 25% less than the goal I set for this particular year. This is to tell you that it wasn't a great year in terms of the goals, but we actually made good money from the markets. But one thing I've always done since trading in this financial market is smashing my goals. Sometimes I don't even trade during the festive period, because I usually hit my goals before the end of the year. But this particular year, I'm still struggling to get to my goals and hit the targets. And the truth is, from the look of things, it's not actually going to happen. But I'm actually going to help you improve your psychology, improve your trading style. So whether you hit your goals, whether you hit your targets or not, you will always come out profitable in the financial market. I'm just going to tell you the things to do to be a better trader from today. The very first trade we have here is on EUR GBP on 15 minutes time frame. Remember, trading will destroy your life if you fail to do the right things. Now, if you zoom out, this is the whole price action starting from, maybe this is October 8th till today being the 5th day of December. So this is the whole price action. Now, the particular trade opportunity was discovered on the 15 minutes time frame, which is the one we have around here. Now, the second one, which is the demand, is the one around here, which we actually spotted on the 4 hours time frame. But let's jump to the 15 minutes time frame to analyze this trade opportunity. From what you can see, it's a missed trade opportunity. Now, if you take close look to this particular price action, you agree with me that this is actually a perfect trade opportunity, because here on 15 minutes time frame, the order flow has been bullish. You see, if you want to read the order flow, both the internal and external, price has been bullish. Around here, we actually had a shift after price was able to maybe break underneath this low, taking this low as well, which is the one I marked from the higher time frame. So from there, price switched bearish. Now, looking for bearish trade opportunity wasn't a bad idea at all, because we were seeing the institutional order flow as well being bearish. This is actually what the order flow is saying. The order flow in this case is clearly bearish. So looking for bearish trade opportunities wasn't a bad idea. That is why we actually looked at this particular area. And if you look at the particular area we selected, it met the criteria for good trade opportunities. If I'm to mark, this is a break of this particular low. You see price took some liquidity. We have series of mitigations, which is indicating that institutional sentiment for this 15 minutes time frame is actually bearish. Then we selected this point of interest. If you look at how we marked our zone, you see the original zone is this bullish candle, but because of refinement, we had to refine to this bearish candle, also including the wicks of the bullish candle, just to be on the safer side. The only thing is that we didn't include the wick of the bearish candle. And if you try to look at this particular trade opportunity, price missed our entry. See, price missed our entry, came very close. This is about 0.8 pips. It's actually less than 1 pip. So price actually missed our entry by less than 1 pip. And if you try to zoom out to see the lowest points and the lowest low price has been able to create this particular trading week, you can agree with me that price has offered about 5% from that entry point. So it was a good trade opportunity looking at it from the different time frames, met the criteria, but at the end of the day, it was a missed trade opportunity. Now, a lot of traders struggle with this, and when they miss this kind of trades, it affects them psychologically. This is what I need to tell you today. You don't need to be down when you miss trades. But the first psychological tip I'm going to give you for this particular trade opportunity is this. Always try to define what a valid setup is, because you already know that this is actually a valid setup based on our analysis. But since price failed to mitigate your zone, you don't have to kill yourself, because you know, okay, this is a valid setup, you did everything right, but this is price missing your entry, which is the level you're actually looking to trade from. And if you look at VIP, see, I think this is this trade opportunity right here from the supply, which is the 15 minutes time frame. This is what the trade opportunity looks like. So it was a missed trade opportunity for everyone in the community. And this is the one I talked about from the demand, and price is here to get to the zone. So it was a good trade opportunity, but we missed. And what I'm telling you today is, as a smart money trader, define what a good trade opportunity is. Whether price comes back to mitigate, whether it's a missed trade, whether it's a failed setup, what you need to do is identify a good trade opportunity, identify what a valid trade opportunity means for you. And once you identify it, no matter the outcome, continue identifying those kind of trades. It's going to improve your trading style. So, very first trade, missed trade opportunity. Now, moving on to the next, which is on GBP CAD, which is actually the most painful for me, because it's also part of the missed trade opportunity I have this particular trading week. Now, taking a look at GBP CAD, this is on the 4 hours time frame. Let's see what it looks like on the VIP. So here is the trade opportunity GBP CAD 4 hours time frame. You can agree with me that these are good trade opportunities, having a very good supply to trade from. Now, moving on. So here is the trade opportunity GBP CAD 4 hours time frame. Now you can see how price is dropping massively currently to the downside. But let's first analyze if this is a good trade opportunity, because one thing I said is you should be able to identify good trade opportunity. Now, zooming out, it's a good opportunity because price has been able to take out the external range liquidity. That's why we see this drop. Now, while it's returning, we see series of mitigation inside the internal structure. This second setup right here actually took this second trade. Now, this is the next level I was looking to get involved. But what you can see is that price also missed our entry. You see, another missed trade opportunity in this case. So some traders, this is where they get it wrong. When they miss trades like this, you see them trying to take random decision, trying to revenge trades, and this is when they lose the most money in the markets. The moment you start trying to revenge, trying to make your money as quick as possible in the markets, this is when you lose trades. And taking a look at how many pips it took for this particular setup to miss our entry, this is actually about 2.3 pips. So price missed our entry by approximately 3 pips. Now, does it mean that we are wrong? Because if we want to see how we marked our zone, in this particular case, we marked the zone with a different pattern. Looking at the particular point of interest, talking about an order block. An order block is the last opposing candle. So here's the last opposing candle right here. This is the last opposing candle over here. And you see, I didn't actually just selected the last opposing candle. Just like I said, I like including the wick of the highest points, because it's actually very, very necessary to include that. It can save you from a lot of things. But let's assume we actually marked the whole of the zone. Let's see, marking the whole of this zone and trying to, okay. So in this particular case, I'm going to say maybe because of technical issues while marking a point of interest, we were not able to include the whole of the range, because if you actually include the whole of this bullish candle, both the little wick we have, we wouldn't have missed this trade. As a matter of fact, price would have tagged us in and we would have made some money from this trade. So in this particular case, I'm actually going to blame myself and the team and everyone in the VIP community for not being able to identify that we didn't mark it from the precise entry points. This is a mistake, and we actually paid for it because in this case, we missed a good trade opportunity. And if you try to see, this trade is currently offering about 5.7%. Probably it might get to this zone where it's going to offer about 7.8%. So missed trade opportunity for us. And like I said, this is the most painful one. I'm human. I'm going to feel pain because I missed trade, but it doesn't mean I have to take random decision. Now, this is the second psychological tip I'm going to give you for this particular setup. So what I'm going to tell you is you should wait for the setups to appear. Okay. The very first one, I said you should identify what a valid setup looks like. Now, once you know what a valid setup looks like, the next thing is to wait for it to appear, because some traders, they know what valid setup looks like, but at the end of the day, they try to force things, take random decisions, trying to force that setup to be available in the market. But once you know your setup, there is no need to start forcing things for the setup to appear. Just take your time, relax, just analyze the markets, wait till that setup appears in the markets. And once it appears, try to execute once price gets to your level. And just note, trades usually have three outcomes. Either you lose, you win, or it's going to be a break-even trade for you. Sometimes you might actually miss some trades. So what I'm telling you is this: wait for your setups to appear. Don't force things. Now, this is another missed opportunity for us. Imagine us winning those two trades. It would have been massive for the community, but we missed. Moving on to the next one was on NASDAQ. So this setup on NASDAQ, I wasn't really happy missing this trade because I've had this setup for over 2 weeks. So this is the next one, NASDAQ on the 30 minutes time frame. So this is actually the next setup we actually missed. So if you try to analyze this setup, it's actually a very good trade opportunity, a very, very good one, because if you try to look at what price is doing around here, at first, we've lost about 2 trades on NASDAQ. The last 2 trades we took on NASDAQ was a loss. The one we had down here, the one we had over here. Personally, I also lost money trading from this setup because we're looking to go short from here, but instead price spikes above a high. So immediately price spiked above a high last 2 weeks. That's when I identified this trade opportunity, looking to go long from here. That's what we identified. So it was a good opportunity, but in this case, I think this is also we getting it wrong as well in the community, because if you want to include the whole of your range and the whole of your zone, this should be the whole of your range. And if you marked that, you would have been tagged in. But one thing I usually consider while marking my trade opportunities is my risk to reward ratio and how long it's going to take price to get to my profit targets, because I like hitting my profit targets inside the same trading week. I don't like carrying trades over to the next week. That's why you usually see me doing some refinements, because those refinements helps me hit my profit targets at least faster than it should be. So this one we missed again. See, price came very close to a point of interest, a missed trade opportunity over here. Price running about 6.8%. And if you want to take a look at the highest point price hits this particular week, see, it's offered about 9.7%. Now, all the trade opportunities we missed this particular week, if you combine them all, you see we missed about how many percent? We missed about, I think, up to 20%, because this one is offering close to 10. The GBP CAD was offering about, currently is offering about 5%. Then this one was offering about 5% as well. So, which means we missed about 10% this particular trading week. Okay. We missed about 10% trades because of some technical errors. Two of the setups was technical, not an error. I can say maybe GBP CAD was technical error because we didn't mark the level rightly. The NASDAQ setup, I'm going to say we missed because of over-refinement, over-refined our zone. But for EUR GBP, I think we marked the right level, just that we didn't include the wicks of the zone. So because of this, we missed 10%. So it's normal in the market. Just keep in mind that you might do everything right and still miss your trades. So what's my psychological tips for this particular setup? So what I'm going to tell you is this: trade only when all criteria are met. Okay. Remember the first one I said you should define what a valid setup looks like. Now, after discovering what your setup looks like, the next thing you should do is you have to wait patiently for that setup to appear. So once that setup appear, it doesn't mean you should just take the trade immediately. You can only trade it when all criteria are met. So in this particular case, the criteria I trade with wasn't met because price didn't get to my zone. So that's why I didn't take this trade. But just keep in mind that while you take your trades, only take trades when all criteria are met. Now let's move on to the next, which are the failed setups. And these particular trades, they were shared to the community. I think I should be showing you this, or should I just disregard? Anyways, let's see the next one, which is the failed setup on GBP AUD. We're going to start seeing it from the community. So this is the last one I showed you on GBP CAD. Here is the NASDAQ setup, which failed. And this is the first failed trade opportunity on GBP AUD. So let's see on the price charts. GBP AUD, and this is actually the failed trade opportunity. This setup was discovered on the 2 hours time frame. So taking a look at what GBP AUD has been doing, I've actually had good trades right here. I'm not going to lie, I've been able to win from here, got involved from here, made some amount of profits. This particular level right here, I don't think I took this trade. This particular one, I didn't take the trade, but I was just using it to rectify that we had at least some internal bullish order flow right here. That's why I decided to select this particular zone. This is what I'm currently seeing on the 2 hours time frame. But if I try to zoom out, I think this one, we got it wrong in this case, because the level we actually marked right here is the inducement for the level we have right here. Let's see that on the 1 hour time frame. So taking a look at this from the 1 hour time frame, you're going to see that if we refine the zone, you see this particular one serves as the inducement for this particular point of interest. Okay, you can clearly see that it serves as an inducement for this level. And if you actually got it right in this case, you would have made some money before the reversal, because the target is not always to target the highest point. The target is to make good money from the market. So let's assume we got involved. You see this offered about 3.9%. So if you actually got this particular one right, we would have made about 3.9% from the setup. But the way I trade, I wouldn't have made up to that. If we got it right, I would have made maybe 1%, because once price is very close to my target, I'm going to lock in at least 1% from this trade. So in this case, we got it wrong by trading from an inducement area. And one of the reasons we got it wrong is because we're actually looking at it from the 2 hours time frame. So what we did wrong right here is failing to do some multi-time frame analysis. Although we started from the daily, had analysis stopped on the 2 hours time frame. So if you actually dropped lower, we would have identified the level on the 1 hour time frame and we would have made best trading decision. So in this case, we got it wrong and we lost 1% from this setup. So what's the psychological tips from this particular trade? What I'm going to tell you is you should stop feeling like recovering losses immediately you lose. Okay, don't feel like you want to recover your losses immediately you lose your trades. That's one thing I'm going to tell you. Imagine me, maybe because I lost this, now discover that, okay, this is actually the right level and I want to take this trade immediately because I want to recover from my loss. You see, I'm going to lose again. So it's not advisable to try to recover from loss immediately, trying to revenge trades, because trying to recover your loss immediately is going to affect you psychologically, and this will make you lose more money in the financial market. When you lose a trade, accept that, make peace with your mind, move on to the next valid and clear trade opportunity. So this was actually another losing trade, which means that we lost some 1% from here. We also had other setups in the community. Most of them, price didn't get to the zone. Some of them didn't offer the confirmations we were looking at, but these are the major trades I paid close attention to this week, missed this, and these ones are the setups I lost this particular week. So moving on to the next, which is going to be on, I think, USD JPY. Let me show you in the community so you know that these setups are setups I take personally, and even the students in our VIP take some of these trades. So when I lose, anyone that takes same trade with me is definitely going to lose money as well. So you should know that. USD JPY. So here's the setup on USD JPY. See, here on the 2 hours time frame. This is what the setup looks like. So USD JPY, this is the 2 hours time frame. Now, in this particular case, I'm going to say that you actually did everything right for this particular setup, because if you zoom out, price is clearly bullish. Okay, price is clearly bullish, reacting to the upside, and we've had some win. We won from this level, won from this level. This particular one failed, so we were looking to trade from the flip zone. So from the flip zone, we've had the first mitigation around here. If you jump to the lower time frame, I'm going to see we've had the first mitigation around here. That's why we had an interest to trade from this particular zone, which is the most recent point of interest. So in this case, we did nothing wrong, selected the right zone, which aligns with the order flow. But every setup is not going to win in the financial market. And you see this particular setup, looking at the bearish candle, you see I was able to include the wick as well to make sure that what happened in the other trades is not going to happen this time. But you see, it was a failed trade opportunity. But after it failed, price also offered another good result from this lower time frame supply, then offered good result. But this particular one, I didn't see the trade opportunity because immediately I lost here. I just closed this instrument. I wasn't even looking at it again. But price offered another opportunity in case we lost money from here. So this particular one is another losing trade, which means we lost 1% from this setup as well. This particular lesson, I shouldn't be doing this kind of lesson, but it's really, really important you understand how trading works, because most times when I just come to YouTube to spend my time watching some YouTube lessons, I see some unrealistic explanation from a lot of traders. I don't like condemning traders, but majority of what they tell you is not actually how it works in the financial markets, because I've been in this space for years. As a matter of fact, I've been running my mentorship for about 2 years and have been trading smart money concepts close to 5 years now. So I've been in this market, I've known how this works. So some of the things they tell you is not actually how it works. I'm not going to condemn that, but I'm going to show you what happens in the market majority of the time and how you can actually adjust to it. But anyways, what's the psychological tips for this particular instruments and this particular setup? So this is the fifth one, and the psychological tip for this is this: you have to create strict rules for when to trade and when not to trade, because it's going to help you remove emotions entirely. Okay, if you have strict rules that helps you know, okay, this is the right time to trade, this is the right time not to trade, this will help you remove emotions from your trading. Keep that in mind, and you should be taking notes as well. Moving on to the next field opportunity, which is on CAD JPY. Let's still see from the community. So here's the trade opportunity on CAD JPY. See from demand. We're looking to trade from this particular demand. Looks like good trade opportunity. But truth be told, it's actually the setup we had here on the higher time frame that influenced my decision to trade from that level, because on a normal ground, that's not my kind of setup. But let's see CAD JPY. So this is CAD JPY right here, and you see how price blasts through the level, and it was a total failed trade opportunity. This is what the setup looks like. And the truth is, the way I trade, I shouldn't take this trade because it's an aggressive return to this zone, but I wasn't available. I just placed my pending order on this particular setup because I had an expectation. My expectation is this, that this leg is actually going to fuel price to at least get to this key level. Then we can look to short the market. But the expectation didn't actually play out. Instead, you see price breaks on the neutral zone. Now, if we didn't have this higher time frame level, the particular level I was going to look to get involved from, which is the level that has the highest probability for this particular instrument, is the one we have down here. This is the level that has the highest probability, and you see how price can respect it nicely. And this level is currently holding price. So it was actually expectation. One of the reasons I selected this zone and one of the reasons it's failed is because I had an expectation. So expectation can as well kill you in the market. I can't always be right. Sometimes I do it wrong. So you have to keep that in mind as well. So expectation made me select this level, which is not the best level, but I was just anticipating the price is going to respect it, fuel the movements to the higher time frame POI, then we trade the continuation. But anyways, we didn't get that, and I was actually punished. I wasn't punished alone. Those in the community was punished as well. So we lost 1%. on this setup again. So finally, we had the only setup I won this week because I only won one trade this particular trading week. But before that, what's the psychological tip for this particular setup? What I'm going to tell you is this: track how many trades you take and miss, okay? All the trades you take within the week, at the end of the week, try to track it, because today being Friday, definitely I'm going to do that with the VIP. We're going to track all the trades, our losses, see how we can improve, see what we got wrong, see what we got right. This is what we do during the Friday's meeting. I usually host meetings twice a week. So track how many trades you take and miss, and it will help you improve a lot as a trader. It's going to help you. So make sure you track that. And if you're interested in enrolling for a mentorship, you can as well look to check out the description. I'm going to drop the link right there. If you need community of traders, the link is going to be in the description. So moving on to the last setup, which is on the only winning trade I have this particular trading week. I know it's funny, but it's happened. Let's see. So this is the only winning trade I had this week, NZD USD, the 1 hour time frame. It doesn't mean that other students in the community didn't win trades. They won their trades, but this is my personal trading, how it went this particular week. So for my trade on this particular week, this is my only winning trade right here. This level we had down here. So this is the only winning trade I have for this particular trading week. And you see, it's a very good trade opportunity. The order flow is clearly bullish, so there was nothing much to do, even though its price is approaching this key level, which I'm not currently interested in trading from. But you see, this is the only winning trade. You see, price came back for the mitigation. Nice reaction to the upside. When I shared the results, price was offering about 7%. But looking at the highest points, price offered about 8% from this particular level. So this particular level offered about 8%. It's a very, very good trade opportunity, trading in line with the order flow. And you see at the end of the week, that setup was able to offer about 8%, and the losses we had based on these setups was about 3%. So what's the psychological tip for this last one? Because I said I'm going to give you 7 psychological tips. The last one is this: risk to reward ratio is very important. You should aim for a risk to reward ratio that suits your win rates. Okay, I hope this enters. Risk to reward ratio is very, very important. Aim for a ratio that suits your win rate. So I'm going to explain this, and it's actually going to be the last one. Now, if you take a look at this particular trades, we had here 7 good trade opportunities. You missed about 20%, not even 10%. We missed about 20% around here because of some issues, technical issues, price doing its thing, missing trades normally as it should be in the financial markets. Then we had some failed trade opportunities, about 3 of them failed, where we lost about 3%. And finally, we have a winning trade which offered about 8%. So you see, at the end of the week, you're actually profitable, because having a trade that offered 8% and you lost 3%, this means that you're able to make 5% at the end of the week. So I'm going to ask you a simple question. If you follow this simple method, are you profitable or are you not? You see, at the end of the week, you're actually a profitable trader. But the truth is, I actually made 4% from this trade, because I'm never going to target 8%. I don't have that patience. I usually target 4%. So what I made from the NZD USD setup was just 4%, which means at the end of this week, after all my struggles, I was able to make just 1% from the market. But anyways, it's actually better than losing money in the market or being in a drawdown. So this is one of the easiest ways you can improve on your trading. Forget about unrealistic expectation. What I'm going to tell you is, as a forex trader, at the end of every week, if you are making between 4 to 7% weekly, it's actually a very, very good one. As a matter of fact, depending on your account size, if you're able to make 4% of your capital, 2%, 3% is very, very good. Now, at the end of the month, if you're able to make an average of 12% on your trading account, it's also very okay. Forget about people telling you how to make 100%, 90%, 80%. Forget about that. At the end of the month, you have an average win of 12%. It's very, very okay. Stop pressuring yourself. We enter in 2026 next year, and 2026 It's actually going to be one of the best years I'm going to spend in these financial markets. This year was the worst so far. I'm not going to lie. My worst year since being a profitable trader. So thanks very much to everyone who watched today's lesson. I hope it was insightful. I hope you were able to learn one or two things. Let's come back next year. And if you're really interested in joining a mentorship, you can as well text me privately, or you can use the link in the description to read about the information, and you can as well enroll for the mentorship. Thanks very much. This is the end of this session.